Good evening to you all, counting Dolphins. Welcome to your favorite show, Learn Extra Live. My name is Abram, and it is an A squared show with Ashraf. Ashraf, how are you?
Hi, Avi.
Are you good? Feeling
How
cold?
are you? Yes, you can see. We're dressed for the occasion.
Yeah, it's cold, but I'm sure after this show, we'll be all warm.
We'll warm them up with this
Actually,
show.
not after the show, during the show.
Right now, we're going to warm them up with the accounting.
All right, we're going to take off our jackets and make sure
Right.
that we're gearing in.
Absolutely.
That's
Absolutely.
right. What are we doing?
Today, we've got a mixed bag today. We're looking at a few things around companies that are important for examination purposes, and we'll be looking at a mixed bag. So stay tuned, because we're going to make sure you enjoy. And in enjoying, you're going to enjoy your exam papers when you write them.
Of course. And I saw some of the questions last night from the guys watching. They were struggling on companies and the bank recon.
Is it?
Yeah,
Okay,
so
so
I'm sure
this
we're going to
is
help them.
today is definitely on companies. And yes, the section that I'm sure your educators have made mention of, the buyback of shares. Today is your opportunity to make sure that you understand exactly how to go about the buyback of shares. And like I said, a mixed bag, a few other things thrown in, but I'm sure you'll be warmed up with the show and you'll be ready for your exam papers.
Of course, and guys, we want to make sure that you learn more with this. Get your notes from learn.mindset.co.za, or simply go to our Facebook page, which is Mindset Learn Extra XTRA, or you can just simply go to facebook.com/Learn Extra, or on Twitter @Learn Extra. Remember, guys, we've got this awesome workbook which you can get for yourself for only 139 rands. All you need to do is to send an email to sales@mindset.co.za, and we'll make sure that we send you an ordering form, and we can get it to you as soon as possible. But let's enjoy the show, and do give me your questions and your comments for the show.
Thanks, Avi. Okay, guys, watch. We are saying that if we look at our summary of our notes, the first thing that we're looking at is the audit report. Now, when we look at the audit report, remember that your auditor is appointed by shareholders. Obviously, we are referring to the external or the independent auditor, right? At the AGM, the annual general meeting, the task of the auditor is to do what? To study the financial statements and comment on its validity. That's important. Obviously, some of the more renowned accounting firms or auditing firms would include KPMG, PricewaterhouseCoopers, Deloitte, etc., etc., etc. Now, this auditor's report should have what we call a validating statement. It should say something. And look out for this. The auditor has examined the annual financial statements. It will be mentioned, right? And in his or her opinion, very important, it is an opinion that is expressed by the auditor, that what? That these statements fairly present the financial position of the company as well as the results of its operations in the manner as required by the Act. Which Act? The Companies Act. Right. When the auditor finds that all is hunky-dory, in other words, if the auditor finds everything is okay, in his opinion, remember that, then they will then issue what we call an unqualified opinion. Now please, grade 12s, listen carefully, because an unqualified opinion is a good opinion, right? I've also come across another term that is often used nowadays where they talk about an unmodified opinion. In other words, they made no changes. Based on what they saw, they were happy with the results. So an unqualified opinion is a good opinion. Remember that. Keep that in mind. Do not think of it in terms of a person's qualifications. That's something totally different. Right, okay. In the event of an irregularity, okay, now they find there's some kind of an irregularity being depicted during the audit. The auditor needs to qualify his or her statement. In other words, they're saying, yes, it is fine, except for, or but this. It means There's something that needs to be explained. There's something that needs to be qualified. In that instance, a qualified opinion would be expressed by the auditor. So, what we are saying is that keep this in mind when we're talking about audit reports. Now, look at this here. We've summarized this for you into the following. 1, if there's an unqualified report that is written or opinion that is expressed by the auditor, that's a good report. Okay? If there is a qualified report that is expressed by the auditor, that means it's bad to the extent that something needs to be changed or something needs to be explained, right? And thirdly, you get what is called a withheld or a disclaimer. And in this instance, it's telling you the auditors are of the opinion that they cannot express an opinion on these financial statements, therefore telling you that this is very bad. So this is just simplistic language which you can understand, giving you an indication when we talk about audit reports what we are referring to. So keep this at the back of your minds at all times. Okay, now obviously we have different types of auditors, and the first type of auditor that we will be talking about is the internal auditor. Who is this? The internal auditor is appointed by directors to do what? To monitor and control the financial information on a continuous basis within the company, right? Remember, the internal auditor works for the company, is employed by the company to do what? To check on internal control. And we do know that the purpose of internal control is to safeguard what? The assets of a business, right? Keep that in mind. Now, if you look at the independent auditor, like we've discussed, is appointed by whom? By the shareholders, where at the AGM, at the annual general meeting, to do what? To express an opinion, very, very important, on what? On the published financial statements of a company. So clearly you can see the different roles that have to be played by both the internal auditor, important within the company, external auditor, appointed by the shareholders. The external auditor or the independent auditor reports to shareholders. Remember, within a company, we have separation of management and ownership. Ownership is vested in the shareholders. Management is vested with the directors. Keep that in mind. Okay. Now, if we look at the following, let's get to our question here. When there is when we're looking at the responsibilities of the auditors, let's look at a few key elements that need to be taken into consideration. 1, it is addressed to the shareholders. Why? It's addressed to them. They have been appointed by the shareholders to express the opinion. Number 2, we have examined, giving you an indication of their duty. This is what it's all about. This is our job. This is what we have done. Right? Again, when an independent auditor does an audit, it is impossible for them to give you 100% accuracy to say, we guarantee that will never ever happen. Why not? Because they say from pages that to that, limitation of their role. They don't check everything. What they do is they do a test, they do a sample audit, they check it out. If it's fine, they move on. If they find something, then obviously they delve deeper to try and find out the root of the problem. Right. Then we have test basis. Like I said, once again, limitation of their role. They do a test. They do not check from page 1 to page 595. Never. Will not happen. Okay. In our opinion, again, they're not saying we guarantee. They're telling you it's our opinion. They're expressing an opinion. Limitation of their liability. Fairly present tells you it's not biased towards any particular group. Remember, you have different stakeholders within the company. So they are saying it fairly present, not biased towards any group. The state of affairs refers to the balance sheet or the statement of financial position as we know it, right? Then we have the results of operations, that is the statement of comprehensive income, also known as the income statement, and the cash flow statement. Okay, in accordance with what? The Companies Act, obviously, a law governing companies within South Africa, and very important, guys, important, IFRS, referring to International Financial Reporting Standards. Remember, companies are operating now on a global scale. In other words, the world has become very small. You find foreign companies investing in South Africa, you find South African companies investing abroad, and as a result of that, the interaction, the global economy, we have to comply with IFRS. You will find that GAAP, which is generally accepted accounting practice, yes, is important, but recently, more important than GAAP is your International Financial Reporting Standards. Okay, keep that in mind. Here's a question for us. Let's start off by saying, number one, you are given a report on the left-hand side, and obviously you have to match it with the correct detail or the opinion on the right-hand side. Let's look at the first one. It says here, a qualified audit report. Okay, now let's look for a qualified audit report. It tells us here, in our opinion, I'm reading C, in our opinion, except for the effect of the unauthorized interest-free loan to the Chief Executive Officer, the annual financial statements present fairly, in all material respects, the financial position of DI Limited. Now, what have you noticed in that particular opinion that stands out? Clearly you can see, in our opinion, except, voila, telling you, in our opinion, but except this particular aspect needs attention. Okay? And if that is the case, it tells us that this is alluding to a qualified audit report. Qualified, meaning it's fine, but this needs attention. Got it? Okie dokie. Next one. An unqualified audit report. Let's check. In our opinion, I'm looking at A. The annual financial statements present fairly, in all material respects, the financial position of Shaba Limited as at the 28th of February 2013. No mention is meant about anything being irregular. Everything is fine. Everything is hunky-dory. This tells you that this is what we call an unqualified audit report. Okay? Clearly you can see the difference. In C, they mentioned this word here, except, telling you this here is a problem. Let's look at the last one. We have not been able to obtain sufficient audit evidence to provide for an audit opinion. Accordingly, we do not express an opinion on what? On the financial statements of Kutule Limited for the year ended 28th of February. Clearly telling you that this is what we call a disclaimer report or a withheld report. So you must know, identify your reports, look for leading words to give you an indication of what it's all about. Guys, when we come back, something very interesting on the buyback of shares. I'm sure you're going to enjoy this. See you in a jiffy.
Thank you so much, Ashraf. When Ashraf is around, don't fear, guys. And a big shout out to everyone that is watching right now. There's Eunice YSA saying, I'd like to hear my name on TV. There you go. I love this teacher. He gives me so much hope. Thank you so much, Eunice.
Thank you, Eunice.
And last one, Nelisi Wem20 saying, I'm happy that my favorite teacher is teaching today. I just enjoy his lessons. Thank you so much, guys. Make sure that you get your notes. And if you're struggling, we're here to assist you. Give us your questions and your comments on our Facebook page. We'll see you right after this. Welcome back, awesome accounting buffins. We're always here to assist you guys and make sure that we help you. But you can also help us by inviting your friends, because it's not about you alone. So invite your classmates, your teachers as well. Tell them to like our Facebook page, which is Mindset Learn Extra, XTRA. And together, let's learn, guys, because we're here as a family to assist one another. While talking about assistance, if you're worrying and stressing about next year accommodation, you don't have to worry. We're here for you. Make sure that you enter the South Point accommodation competition, and you could be the winner of that 1 year's free accommodation for next year. More details are on Facebook, and it's simple. You just fill in the entry form, and voila, you could be drawn as the winner for next year. Ashraf?
Yes, AB.
Over to you, sir.
Can I apply for the accommodation to study next year?
Remember, you and I, we're gonna be sharing. So
that's the one. We're sharing a room, right?
Yes.
Great
so
stuff.
It's gonna be fine.
Great, AB. Okay, guys, back to the accounting. We are told in this question here that the share capital of a company is made up of 500,000 shares, authorized ordinary shares, of which 400,000 were issued by the end of the year. 3/4 of these shares were issued for 600 cents each in 2009. Important, right? So watch what we do. Immediately we see that in our answer book, what's given to us is the fact that, watch, this is important. Authorized 500,000 ordinary shares, there's no value attached to it. You don't have to put in anything, because that's the number of authorized shares. Just to explain that concept, authorized tells you that that's the maximum number of shares that the company can issue, right? That's it. Nothing further than that. No other values attached to it or anything for that matter. Right, now, what had happened? What have we issued? We've issued 300,000 ordinary shares at the beginning of the year at 6 Rand each, giving me a value of 1,800,000. Got it? Okay, now what happens? Now we are told that let's go back and find the information. Here goes. Where's my information gone to? I need my information. Okay, there's it. There's my information. Okay. During the year, what had happened? We sold a further, 1/4 of these shares was sold at 780 cents per share on the 27th of February 2014. That means in this financial year, what had happened? We sold a further 1/4 of those shares, right? Obviously, we know that 3/4 was 300,000 Rand, so obviously a 1/4 would be 100,000 shares. Now, let's do that. So we bring in the 100,000 shares that we are selling, right? These are the shares that we sold during the year. And these shares were sold at 7 Rand and 80 cents. So immediately you know there's a value attached to those shares, right? These initial shares were sold at 6 Rand per share. These shares were sold at 7 Rand 80. So immediately we say, fine, take out our calculator, 100,123 times 7.8, and that will give me a value of 780,000. Guys, the 780,000 is the value of the shares that we sold during this year. And our question will show us that there, 780 cents per share sold this year. Okay, So we've got the sale of shares during the year. Remember your double entry? A debit to bank, we're receiving the mullah. Debit bank, credit ordinary share capital. Right, straightforward entry, nothing complicated about it. Now what happens? At the end of the financial year, on the 28th of February, 20,000 ordinary shares were repurchased. At how much? At 800 cents per share. These shareholders were entitled to the final dividend. We'll come to the dividend story just now. Let's look at the repurchase of the share. Right, now, immediately tells me, okay, and I'm going to do something here, just to extend the page to show you a bit of a calculation. What has happened? We repurchased 20,000 shares, okay? And if I look at my note for ordinary share capital, obviously this will be 20,000 shares that were repurchased, and they were repurchased. Now watch this. They were repurchased at 8 Rand per share. Let's get the amount. Let's get the amount so we know what we're working with. They were repurchased at 800 cents, in other words, 8 Rand per share. Okay, so now, in my ordinary share capital, I cannot use the 8 Rand. Why not? Because the 8 Rand was the repurchase price. What value do I use in my ordinary share capital? I have to use the average price of the share. And that is why I said, let me show you the calculation. Right, so in terms of my calculation, this is what I want. I want to do this here. Remember what I said? I said we've got, initially we sold 300,000 shares. Let's get that figure right. 300,000 shares, right? We've got the value. The value was 1,800,000. We sold a further 100,000 shares, right? And the value of that was 780,000. Obviously, these figures are appearing where? In my note. There we go. There's my 1,800,000. There's the 780,000. There's the number of shares, 300,000, as you can see, plus the 100,000. In other words, what am I doing? I'm working out an average of how many shares? 400,000 shares at the value of, let's do our calculation. Our calculation is 1,800,123 plus 780,123, 780,000 to give you a value of 2,580,000. Watch what I'm doing here, matriculants. I'm adding the value of my shares. There's the value of my shares. What do I divide it by? I divide it by the number of shares that were issued, which is 400,000. Can you see that? To give me a value of 6 Rand and 45 cents. Okay, what have I done? I've calculated the average issue price per share, which is 6 Rand and 45 cents. 6 Rand and 45 cents. There goes. Okay, now, why do I need the average price? I need the average price in order to do the entry in my ordinary share capital account. Why? When I repurchase shares, I credit bank with the full amount, I debit ordinary share capital with the average price, and I debit my retained income with the price above the average price. Let me repeat that because of its importance. Number one, I credit bank. The money is leaving our bank account. Credit bank. Debit what? Ordinary share capital. With what? With the average price. Debit what? The retained income account. With what? With the price above the average price. And you'll see just now what I'm talking about. Watch here. 20,000 shares that were repurchased, 6 Rand and 45 cents. So immediately I say, fine, 6 rand 45 cents times my 20,000 will give me a value of 129,000. Watch, 129,000 rand in brackets to indicate I'm decreasing. Remember, it's a debit to ordinary share capital. Okay, so there's my debit entry. Now, what am I left with? And this is something that you must take cognizance of. Watch. I started with 300,000 shares. I sold a further 100,000 shares, which gave me a total of 400,000. Minus the 20,000 will leave me with 380,000 shares when? At the end of the year. Right. Let's take our calculators and do this calculation just to prove something to you. Watch. You've got the 1,800,123 plus you've got the 780,000, right? Minus 129,000 will give me a value of 2,451,000. 2,451,000. Yes, represented by how many shares? By 380,000 shares divided by 381.23 will give me a value of, watch that, voila, 6 rand and 45 cents, which was what? The average price that I had calculated here when I did my repurchase. In other words, what am I saying? I'm saying at the end of the year, these shares here, with a value of 2,451,000. How many shares? 380,000 shares. What is their value? Their value is the average price of our shares. Got it? Keep that in mind, that when you are doing the calculation at the end, you should end off with the average price that you worked out in order to calculate the repurchase when you worked out the average price. Okay. Going on to my retained income. I start off with my balance at the beginning of the year, right? Okay, let's get my information. And my information is here. My retained income balance at the beginning of the year, 580,500. So therefore, 580,500 would be my balance at the beginning of the year. 580,500. Okay, now I need my net profit after taxation. Net profit after taxation. Okay, not a problem. I'm sure my information will be there. Let me see. Let me go to my information, and I go to my net profit after tax. And yes, what do I find? The dreaded question mark. What are we going to do now? Panic? No, guys, don't panic. It's a figure that is obviously not given to you, but there must be information in that question that will allow me to calculate my net profit after tax. Don't go into panic mode. Relax, chill. Look for information. And let's see. Financial indicators for the year ended February 2014. What am I told? My debt equity ratio was that. My earnings per share was that, and was 165 cents. My current ratio was 1,9:1. Amongst those indicators, is there one that I can use to calculate my net profit after tax? Let me see. Let me apply my mind. Debt equity ratio is obviously my non-current liabilities is to shareholders' equity, which won't solve my problem. Earnings per share is my net income after tax, divided by the number of shares issued times 100/1. Certainly ringing a bell, isn't it? Now watch what we have done in this particular question. Instead of asking you to calculate the earnings per share, the earnings per share was given to you. In other words, you are expected to use the earnings per share in order to calculate your net profit after tax? Interesting question, isn't it? Great, guys. Let's apply ourselves. Right, what do we know? We know that the earnings per share was 165 cents. We also know that the number of shares that were issued was 380,000 rand. Therefore, let's say 380,000 times, what was my 165 cents times 1,65, and you see what I get. I get an amount of 627,000 rand. Maybe can I just need a sip of water, please? If you could just check a question for me there while I've got a bit of a...
Okay, cool. I've got some tweets from you guys. There's one from Beer Square saying, please ask Mr. Ashraf to explain dividends for shareholders for me. And I've got a couple of comments as well from you guys. Noktula saying, tomorrow I'm writing accounting and I'm enjoying the lesson today as my favorite teacher is on. I hardly can wait for the paper. Thank you so much, Mindset. That is Noktula. All the best for tomorrow.
Thanks, guys. Thanks, AB. I just needed to. I've got a bit of a sinus problem, so I just needed to wet the throat a little bit.
It's okay.
Thanks. Thanks, guys. Thanks for those lovely tweets. Right, coming back. What did we say? We said that 380,000 was the number of shares that have been issued. Okay? Times what? We multiplied it by 1,65 because that was my earnings per share. So in other words, you had to work backwards to find out what was the net profit after tax. There goes 627,000 rand. So when I go back and I do my retained income, net profit after tax, 627,000 rand. Got it? Okay. So I had to use my earnings per share to calculate my net profit after tax. Right, let's move on. What else did we say? Remember, we repurchase shares. And when we have a repurchase of shares, we also want to include the price above the average price. Do you recall we repurchased these shares at 8 rand, of which we had 8 rand minus 6.45, that was the average price per share. Let's do that again. 8 rand minus 6.45 to give you a figure of 1 rand and 55 cents. What was the 1 rand and 55 cents? That was my price above the average price. Got it? That was the price above my average price. And therefore, this will tell me that your 20,000, which was the number of shares, times the figure there was 1 rand and 55 cents. So let's do our maths. Times 2123 to give me a value of 31,000 rand. What is the 31,000 rand? The 31,000 rand, let's just check if our calculation is correct. Let's do it one more time. It was 1 rand 55 times 20,000, which was the number of shares that we repurchased. There goes 31,000 rand. The double entry for that was a debit to retained income. Remember, when I debit retained income, what am I doing? I'm subtracting from my retained income. Can you see the double entry? So therefore, this means that we debited ordinary share capital, we debiting our retained income with what? With the price above the average price. Okay, now what do we calculate? Now we calculate our dividends. Right. In terms of my information, once again, let's see what am I told. I'm told that an interim dividend of 60 cents per share was paid. The new shares that were issued did not qualify for the interim dividend. Once again, going into my information, what do I have? I've got the following. Watch. I'm told here that at the beginning of the year, we had, in terms of my answer, recall my answer. Here's my answer. We had how many shares? 300,000 ordinary shares. My new shares did not qualify for the interim dividend. Therefore, I take 300,000 times 6, and that will give me a figure of 180,000. What is the 180,000? The 180,000 will be my interim dividend. Once again, it will be the 300,000 shares multiplied by, 6. Okay. Then I'm told that we also declared, what did we declare? Watch here. The company directors declared a final dividend of 80 cents per share. Now be careful with this one here. Why must we be careful? Well, you're going to have to wait for the break to find out why we have to be careful. Because it's time to take a break.
Of course. Thank you so much, sir. And guys, if you still have some questions, this is your last opportunity. Make sure you send those questions to us. Our Facebook page is Mindset Learn Extra, or you can just go straight to it on facebook.com/Learn Extra. Remember to also get yourself this awesome workbook for only 139 rands. All you need to do is to simply send an email to sales@mindset.co.za. I see that is a cue for me, Ashraf. You need to have a sip of your water.
I think so.
Without us spying on you. Well, guys, we'll see you after this break. Welcome back, guys. Now, if you think you are a bright spark, enter the Be a Bright Spark competition. Remember, the competition is closing on the 3rd of July, and the winner will be announced live on Learn Extra Live on the 21st of July. Now, I've posted a picture of somebody on our Facebook page. His name is Diamond. He has posted to us, actually, his picture with his Safeways K53 manual book. So I'd like to challenge you as well. If you have entered for the competition and you are waiting in anticipation to be called as the winner on the 21st rather, make sure that you send me that book, that picture of you with the book, the Safeways book, and I'll repost that picture. So keep on sharing. Ashraf, I've got some questions and comments for you.
Let's go.
Stembisile Jali says, Trinity Secondary School in Lenasia, grade 12 accounting students are writing tomorrow. So this lesson will be very helpful to us, especially the theory, since we were told a lot of the paper will be theory questions. Thanks to Mr. Ashraf for being near. He surely is whipping away my fears for tomorrow's paper. Thank you so much.
Lovely comment. Thank you very much.
And yeah, to everyone that is writing tomorrow, Mzwaki saying, when Ashraf is around, fearless. Voila. Guys, voila, guys.
Voila.
Hope you do your best, all the best, guys. And there's a couple of questions that I'd like to give you.
Okay.
Here's one from Timoso Khalane. How is the amount for buying back shares reflected on the cash flow statement?
Brilliant question. Excellent question. Thank you for that. Watch here. We know now that the average price of the share was the 6 Rand 45. You recall we did that. That was a 6 Rand 45. And the price above the average price was the 1 Rand and 55 cents. Okay? Now, obviously, if you add that, it's going to give you a value of 8 Rand, which was the repurchase price of the share. Recall. Now, take the 8 Rand, multiply it by 20,000. And this is what I want to do for you now. I want to show you that the double entry will make it crystal clear to you. Watch this here. Here's the accounts that I'm dealing with. I'm dealing with my bank account. I'm dealing with my ordinary share capital account, and I'm dealing with my retained income account. Guys, when you are challenged in accounting, the simplest and the easiest way is draft these accounts. It makes so much of sense and makes it easy for you to understand. So watch this here. We said that we bought back 20,000 shares at 8 Rand. Obviously, if you multiply 20,000 times 8, you're going to get a value of 160,000 Rand. Watch my entry. A credit to bank of 160,000 Rand. Okay? Remember, I debited my ordinary share capital with the 6 Rand 45. Let's get that figure so we don't have to calculate it. Here goes. Let's get the figure. The buyback of our shares was 129,000. So immediately you can see that 129,000 was in a debit to my ordinary share capital of 129,000 and a debit to my retained income of 31,000. Now, watch this here. Ordinary share capital went into my ordinary share capital at 129,000. average price. Retained income, the price above the average price, 31,000, debit to retained income. However, a credit to bank of 160,000 rand, that answers your question. What amount goes to my cash flow statement? The amount that I paid to repurchase those shares. What amount of money left my bank account? There's it, guys, 160,000 rand. That's the figure that you will enter into your cash flow statement. Remember, the total amount of money that left our bank account, that's the figure that goes into my cash flow statement. And remember, one more thing, that it's an outflow of funds in bracket. The secret of your cash flow, guys, no bracket, no mark. You heard it from Ashraf. No bracket, no mark. Remember, you got to show an outflow of funds as a negative 160,000 rand. Got it? I hope I've answered your question.
That's fine. Here's another one from Johanna. May you please explain the specific identification method?
Okay, guys, that's a stock method. We've done this in our previous shows. We urge you, I'm sure they can, maybe they can get hold of that show.
Yes, yes.
Look at it, look for specific identification. But just to answer your question in a nutshell, specific identification just means that you identify an item and say, this is its value. And the example that they use in the show, I can remember, are motor vehicles. You got a C200, you got a S600, and you got the new C180, whatever you have. Take the value of each vehicle, and each one has a specific value. So therefore, each one is specifically identified, and each one has a fixed value attached to it. That's what we mean by the specific identification method.
All right. For all other questions, I must say the questions on fixed assets, guys, you can get the show that we had for you, or the notes. You can also get them on len.mindset.co.za.
Okay. The one on fixed assets, if we have time at the end of the show, there's just one thing that I want to discuss with them, but let's finish our question, and then we'll go on to that question.
Cool.
Perfect. Okay, so coming back to our question, remember we said we're calculating the final dividend, and what did we say? We said the final dividend was, there's it, a final dividend of 80 cents per share was declared on the 26th of February 2014. Now, important information is that when we were told, when we bought back the shares, what were we told? We were told that these shareholders were entitled to the final dividend. That means those that were repurchased, they were entitled to a final dividend. So obviously, the number of shares that we're working with would include what? Look at my number of shares here. It would be the 300,000 that I had, plus the 100,000 shares that were issued. The total, if we add those two together, would be 400,000 rand, okay? And if we do our calculation now, we would say 400,000 shares at 0.8, which is 80 cents. Let's do the maths there, which is 40123 times 0.8, and this will give me a value of 320,000. There's my 320,000. Remember, what do I now do? I add my two components, my two dividends, the interim, that was my interim dividend, that was my final dividend. Add them together, it would be 320 plus 180,000. Okay, and that will give me a total of 500,000. That will be the total of my dividends. Obviously, what I'm going to do now is I'm going to take all the components, 580, 500, plus the 627, minus the 31,000, minus my 500,000, and that will then give me my retained income at the end of my financial period. Okay. We're now told that there's a following extract that you have to read through about somebody that has been suspended over a loan allegation. In this case here, the Chief Financial Officer, the CFO, is fighting back, claiming that he received an appropriate sign-off approval from his bosses for an interest-free loan of 6 million rand. Okay? Obviously, it's a case study. Based on the case study, you are expected to answer the following questions. In your opinion, do you think that the Chief Financial Officer acted fairly in allegedly authorizing a loan to himself? Please explain. Obviously, you can see that when you're authorizing a loan to yourself, it is unethical. Right? And because it is unethical, what we are saying is that this should be done via the proper channels. Okay? So, your shareholders are being disadvantaged. Okay? Obviously, if you're giving somebody an interest-free loan, the company could have taken that money and invested it in some form of an investment and earned a return on that investment. This is an interest-free loan. Obviously, what we are saying is this is a question that allows you to express yourself. It's a question where you have to read and make a decision based on what has happened. Clearly, this matter needs to be investigated. Right? And obviously, you have to look at the perspective around what has transpired. And based on your information, you have to respond for 2 marks. Notice, answer in bullet formation. In this way, you can clearly get the marks that are due to you. Right? The next question said, other than the suspension, what else could Telkom have done to address this matter? Provide 2 suggestions. So they're saying, other than the suspension, we're not talking about suspending the person. 1, recoup the money. Get back the money. The money that was given out as a loan, we must get it back. Get the person to sign a form of a declaration or investigate the matter. If the person is found guilty and if the person is then suspended or put on then the idea is for us to get back the money. So you could say, make sure that the person repays over a period of time and obviously charge the person not the 6 million, but with the current interest rate in the market. Okay? So the person has to pay back that funds. Another one that we can use, or we can give as a possible alternative suggestion here, would be if the person is going to be fired, or if the person is going to be suspended, from his or her pension fund, we can get back the money that is due to us. The idea is to recoup the money, the 6 million rand loan that has been given. Once again, guys, look at the scenario, answer to the best of your ability. These are types of questions that you can definitely expect in the exams. Okay, AB, that question that we had on the fixed assets.
Yes.
There's something that I thought that I want to discuss with you guys. If I have an asset with a cost price of 100,000 rand, right? And it has an accumulated depreciation of 90,000 rand. Right. We are expected to calculate depreciation at 20% per annum on cost. Okay. Watch this closely, guys. Watch this closely. First things first. If I'm calculating my depreciation at 20% per annum on cost, what do I have to do? I have to work with my cost price, which is 100,000. So using art, I say 100,000 over 1 times 20 over 100, which is my rate. It was for the whole year, so 12 over 12. Clearly, you can see that would amount to 20,000 rand. Okay. Now, if this is equal to 20,000 rand, notice something strange here. If I add the 20,000 rand to my accumulated depreciation, it will move my accumulated depreciation to 110,000 rand. Do you see that? And now, my cost price is 100, and my accumulated is 110, giving me a negative answer here as my book value. Now, that is not on. When you come across a situation like this here, discard the 20,000 rand. Ignore it. Forget about it. You cannot work with that figure anymore. Meaning that this tells you now that to calculate your depreciation for your current year, watch, cost price minus your accumulated cost price minus your accumulated depreciation is equal to a carrying value. Your cost price is 100,000. Your accumulated depreciation, the maximum that it can go to, is 99,999 rand, thereby giving you a carrying value of 1 rand. Now guys, watch. This means that if you look at your depreciation, your accumulated was standing at 90,000. So the maximum depreciation that you can write off is 9,999 rand, thereby giving you a carrying value of 1 rand. Let's go through this one more time for you to understand its importance. Step number 1, do your normal calculation for depreciation, like I did there. Get your value, which was 20,000. Now look at the existing situation. That if I depreciate by 20,000, what am I doing to my accumulated? I'm moving it to 110,000. Can I say that my vehicle is valued at minus 10,000 rand? Certainly not. It's not acceptable in accounting terms. Therefore, what I have to do is ignore the calculation that you have done. Ignore it. Forget about it. It's non-existent. You're not going to use that figure. What do? I go back and I say, fine. My accumulated is standing at 90,000 rand. I want to be left with a carrying value of 1 rand. Therefore, the maximum depreciation that I'm able to write off is 9,999 rand, thereby giving me a value, like I showed you here. Coming back to this here, we have a cost price now of 100,000, accumulated depreciation of 99,999 rand, and giving me a carrying value of 1 rand. This is what we mean when we use the carrying value of 1 rand. Well guys, the end of the show, and what I want you to do is, those of you that have alluded to the fact that you're writing accounting tomorrow, number 1, when you receive your accounting paper and your answer book and you are given reading time, go through your answer book. Why? It gives you an indication of what is expected of you in the exams. There's no instruction that says, do question 1 first. Nowhere does it say so. So therefore, you look for the question that you like best first, and that's the one that you start with. Because if it works out, you're on an accounting high. And once that adrenaline is pumping, definitely the A is in sight. And not the AB, the A in accounting.
Voila.
Voila.
Well, thank you so much, Ashraf. It's been a great show and
Thanks,
a great
really.
term, I must say.
Absolutely.
We've really enjoyed ourselves and surely giving information to the guys and learning more with them. Guys, I must remind you that if you want our notes or previous shows, go to our website, which is learn.mindset.co.za, or else we are always available for you guys on our Facebook page, which is facebook.com/learnextra. Have a good evening, and thank you so much to the Department of Basic Education for making sure that we have this show. We love you all. Until we meet again. Peace.
And good luck, guys.